Right. This is CA Sujata. In today's Crack the Code series, we are going to understand the auditing practices that are generally followed in Resident Welfare Association, and also what are the best practices that need to be followed, what are the challenges, and as a professional, what best value add we can give to the society. Let's understand in next 20 to 30 minutes. When I say Resident Welfare Association, audit, the Resident Welfare Association is registered under different acts depending on the state in which it is registered. Say, for example, if you take up the case of Maharashtra, predominantly the apartments are registered under Societies Act. Whereas if you take Karnataka, it is registered under either Societies Registration Act or KOA Act. So irrespective of whichever act it is registered under, the bylaw stipulates that the books of accounts are to be audited by a chartered accountant. As per the bylaws and the respective acts, the chartered accountant needs to audit the books of accounts of the RWA, and the association has the responsibility in submitting the audited financials to the concerned, or we call it as a competent authority, to submit it within the prescribed time. So when I say the auditor needs to be appointed, first and foremost, as auditor, it is not like any other company audit. The chartered accountant, whoever is engaged as an auditor of RWA, first and foremost needs to understand the scope of work, and also he has to take little bit extra more effort in explaining the role of the auditor and the auditee to the RWA. The reason why I'm saying is that if you take cities like Bangalore, the board of members are well educated and the members are also very well aware of the laws, but still when it comes to audit, the board members or the association gives the priority wise lesser importance, thinking that everything is accounted, everything is digital. So the auditing is not taking predominance or importance. So first and foremost, they think that auditing is yet another activity, but it's not so. As far as the auditors are concerned, unlike any audit which are prescribed under Companies Act or Income Tax Act, this audit, or RWA audit, requires certain special skills. In the sense, it is more like a proprietary audit and management audit rather than the statutory audit. So it's a combination of all the three. So we have to give best of our efforts in executing the audit. Having said that, the association also should take the audit in a much more serious manner, so that both the auditor and auditee are able to add value to the residents. Ultimately, the objective of audit is keeping the interest of the stakeholder, who are the members and the government here. So when I say the scope of audit, we can bifurcate the scope of auditor into 4 different baskets. One is the verification of transactions, which is the preliminary activity which are common across any audit for that matter. So books of accounts need to be verified, and there is something called as integration of software with the billing software that needs to be fixed and verified, and vouchers and bills are to be verified, which is common across all audits. And when I say the second basket of audit process, the verification of financial statement. When I say financial statement, there is some comparatives and variance analysis needs to be carried out, because if you look at the expenses, if it is it is beyond certain limits of increment as compared to the previous year, then the auditor may have to go deep into it, because of the simple reason that there could be a difference of revenue expenditure, capital expenditure being booked as a revenue expenditure. There is a possibility one. Or second, there is every possibility that the expenses are of exorbitant nature due to various reasons. So whenever there is a variance analysis is done, it is the responsibility of the auditor to bring it to the knowledge of the auditee, which is the management, and also examine whether any accounting error has resulted in the variance. So whenever there is a surplus, the resultant of net of income versus expenses is a surplus or deficit, that also needs to be examined, because of the simple reason that it is very unlikely that any association collects more amount than what is expected or what is budgeted. So it is very unlikely to have exorbitant surplus. If at all there is a surplus is arising in any audited in any financial statement, it could be because of either wrong accounting, or it can be from from the income generated out of the other income. So when I say other income, the other income can be non-member income, or members other income, members other income, or it can be interest on FD or savings deposit interest. So there also the classification of interest on SB or FD, which are blocked for corpus fund, keeps plays a vital role. That needs to be whether capitalized or it has to be booked as a revenue income, needs to be examined by the auditor. So next part of the detection or irregularity, or in case of any embezzlement, the auditor has to keep a watch on the what are the cash expenditure. Majority of the associations have got out of the cash payments and cash collections from maintenance, but still, if at all any cash expenses are incurred, it is a responsibility of the auditor to ensure that the association follows the prescribed bank balance limit stipulated in the bylaws. So the fourth basket comes the reporting of non-compliances. The association which are larger in size, say for example where there are 2,000, 3,000 flats are there in one RWA, then it becomes complex in the sense of compliances. So there could be professional tax complaints, there could be GST complaints, there could be TDS complaints, there could be advance tax. So there are various other complaints are all to be fulfilled. So it is a responsibility of the auditor to ensure that the management is well aware of the complaints that are applicable for the RWA and then adhere to the laws. So when I say the auditor's responsibility is huge in RWA, at the same time, it is the responsibility of the duty of the auditee also to ensure that the proper records are maintained and submitted to the auditor on a timely manner. Otherwise, it's not one man's effort. It is a combination of auditor and auditee, which results in the successful completion of the audit. So as far as the auditor concerned, first is to fix the responsibilities of the auditor, ensure that it is communicated to the board that this is the role of the auditor, this is how the audit needs to be carried out for the seamless flow of any kind of audit to be successful. Then the next part of it is that understanding roles and responsibilities. When I say understanding roles and responsibilities, before commencement of the audit, the auditor needs to understand how the management functions. Who are all the key management personnel, office bearers, who are the signatories, and what are their responsibilities as office bearers, because in few cases the office bearers play dual role or they do not function at all because of their own personal reasons or official commitments. So this results in either duplication of work or overloading of or overlapping of roles by the other role player. So it is a responsibility of the management to ensure that there is no such thing happens. If at all it happens, it is brought to the notice of auditor. This will help the auditor in understanding how the functions are happening in the finance side, and helps him to carry out the audit in an efficient way. And one more important factor which we have to understand is that in larger apartments there are various committees are set up. Say for example, one committee for painting committee, the other one is for landscape committee. So various committees are formed. Though it is not the responsibility of the auditor to understand the roles and responsibilities of various committees, but still prima facie the auditor, if the management brings it to the knowledge of the auditor that the functions of the committee, it will help the auditor to, at the time of finalization, whether any funds are utilized from corpus or is it a routine expenditure. So it will take it will give a very good idea in the completing the audit in the correct path. So next key role which needs to be understood is that accountant. In some of the apartments, the accountant plays a dual role, either as a admin cum accountant, because of the quantum of work involved. So this ends up in compromising the role of the accountant. This in turn results in quality of audit. So the first thing is that if audit quality to be maintained, the quality of accounts, the completion of accounts should be done in the best possible way, so that the auditor spends quality time in reviewing and other aspects of audit rather than correcting the mistakes of the accountant. So these are some of the responsibilities and roles which needs to be communicated upfront to the management and RWA president or secretary or treasurer, so that the auditor's role is effectively managed. And when I say the checklist for audit, when I say key areas of audit, the audit can be basically bifurcated into 5 broad segments. One is the income. The income can also be into 3 or 4, where the income from maintenance, which is very straightforward because it is captured in the books of accounts as per the invoice raised by the RWA. But as auditor, it is necessary for us to independently verify by multiplying the number of apartment and the square feet rate and the square feet area, so that it matches with the total amount that is captured in the financial statement. And then when it comes to members' income others, say for example, parking charges, that also needs to be cross-verified with the layout plan, or how many parking lots are available, how many months that parking lot was vacant, whether whatever period it was let out, whether multiplied by uniform rate, number of months, whether it matches. So these kind of cross-checking is required as a statutory auditor. Then when I say the pattern of income from members and non-members, as auditor, it is our paramount importance to ensure that the pattern of income, like how much is the surplus which is generating out of the other income, or whether the association is dipping into the reserves and surplus, so that it will act as the audit report will act as a warning that yes, this much of money has been used up for running the regular activity of the organization, rather than collecting it from the maintenance. Basically, the association is set to make no profit and no loss, no profit or no surplus or no deficit. The monthly maintenance should be sufficient enough to run the operations, but still there is every possibility that because of non-payment of few members, or dipping into the reserves and surplus, or expenditure increasingly higher than what was budgeted, various reasons it could be, result in a deficit or surplus. So the auditor can always make a comment the reason, or at least understand why such a scenario has occurred in the financial statement. Then when it comes to expenses, the regular expenses are to be verified. Basically, the association has only set of repeated expenditure, unlike corporates where we can have some business promotion and other advertisement. Those kind of expenses very rarely happens. Here the chart of accounts are fixed in the beginning of the year, so all the expenses are all recurring nature. If at all any exceptional happens, yes, that has to be examined, whether proper approval by the members, from the members, or is there any majority approval has taken. Those kind of exceptional expenses are to be verified. Having said that, when the expenses are all regular in nature, we have to verify the master contract, whether it has been renewed or is there any innovation in the contract. So these are the clauses which we have to verify when it comes to the expenses. And the asset side, if I have to say, there is every possibility that instead of writing it off as expenses, it is capitalized. And receivables are not matching because of various reasons. Now, due to digital payments, the accountant is not able to match with the invoices against the receipts, and the BRS is not done on a timely basis. It could be various reasons where the receivables are either exorbitant, or there is a suspense lying in the form of receivables lying in the form of suspense. So as auditor, it is very necessary and take the confirmation from members that the outstanding position which is reflected in the financial statements are correct, true and correct. And when it comes to liabilities, as I mentioned earlier, the statutory liabilities play a vital role. That too, after GST, it is very important for the RWA to ensure that the GST compliances are met as per the rules prescribed therein, because even the input tax credit will have to be treated in the way as prescribed by the law. The Rule 42 needs to be followed, and the input tax credit reclaim ledger to be established. And also there is a reversal of input tax credit which needs to be either segregated towards the expenses, or it has to be booked as a bulk amount, unutilized input tax credit. So these are the some of the nuances which the RWA needs to take care while filing the income tax or GST returns, which requires major attention, or professional attention is required in compliances. So this is one part from the GST angle. And when it comes to income tax, always the other income, non-member income, and the interest income is taxable from income tax angle. That being the case, it is necessary for the RWA to pay the advance tax on time and then collect the TDS quarterly forms on a timely basis, and then discharge the tax liability, filing of returns and filing of quarterly TDS returns. These are some of the compliances which needs to be taken care. And when it comes to the utilization of funds, sinking fund, the auditor has to ensure that the utilization of funds is meeting the guidelines prescribed by the bylaws, or due approvals are taken from the committee, and there is no unilateral decision has been taken when spending any amount, major amount, for any capital expenditure. So these are some of the things which the auditor has to go beyond the books and then report it to the management or to the resident, so that it becomes a value add for the audit that is carried out by the auditor. Apart from that, there are certain other issues. Say there are legal issues which are pending in any RWA, some problem or the other, either relating to land title or relating to the developer handing over, or any other legal issues relating to acquiring some land. Something or the other will always be happening, which will run over a period of time. So when unless and until the management brings it to the notice of auditor, this will not be the auditor will not be in a position to estimate or assume. So the the management should ensure that the proper disclosures are done to the auditor so that the necessary contingent liability or whatever measures needs to be disclosed in the notes to accounts will be taken care by the auditor. So whenever changes in the management happens, because the election process in every RWA differs from one to the other. In some cases, every year there is an election process. In some of the RWAs, it happens once in 2 years. So as and when there is a change of roles, it is necessary for the management to ensure that all the legal documents or the records that are submitted to the authorities are changed. But having said that, because of their lack of time, and it becomes their secondary responsibility to ensure that these things are managed. So in some of the instances, it has so happened that the GST department has served a notice. It has gone and stuck in the email inbox of one of the office bearers who quit the RWA, who has sold the RWA long back, who has sold the apartment long back. So it got unnoticed and the bank account got attached. So these are some of the instances which the RWA needs to take care, so that the common email ID or the authorized signatories email IDs are kept updated. This will help the auditor in proper disclosure and suggest the corrective measures. So when it comes to audit process, so the audit process, though it is just like any other corporate audit or management audit, this is something slightly requires little bit of hand holding. So auditor is expected to work something more and something give beyond his duties, I would say, uh, because of the reason that certain closure entries are reserved for the guidance and advice of the auditors. The accountant will not be in a position to close the closure entries. JVs, for example, GST closure entries or income tax closure entries, or there are certain receivables or write-offs, prepaid expenses. These are some of the line items which the accountant needs the handholding from the auditor. So it is, though the books of accounts are closed, the audit would have commenced, but still, as far as the association is concerned, it will not be in a position to ready for audit. So the auditor in such cases, the certain amount of handholding is required, and to ensure that the auditing task is completed in a timely manner. And when it comes to the reconciliation, ITC reconciliation, and treatment of Rule 42 of GST, and reviewing of non-deduction of TDS. These are some of the items which the checklist needs to be given by the auditor before start of the audit, so that the audit process is completed within the time that was committed by the auditee and the auditor. So with this, I have come to the end of the presentation. I hope this presentation was useful. Thank you so much. Thank you.